Um, with agent financials, they also have the experience as real estate agents to also give you that advice. So,
Oh, awesome.
yeah.
Amy, do you want to go first?
Sure. So I'm Amy McMullen. I'm the MCA over at the South Valley office. I have been with South Valley for 10 years. I've been in the MCA office for 7 years, 5 of those as MCA. I come from a finance background. So before I became an agent, I worked in revenue recovery. So I worked for a company where other companies would come to us and we would look at all of their financials and find where they were bleeding money and put together systems to help them recover that money. And then we would get paid off of a portion of what we recovered for them. So looking at financials and looking at where those can be tightened up or where we might be losing money is something that I've been doing for a long time. Yeah, and so I have been over here and an agent for 10 years. Yeah. Novalee, you can introduce yourself.
So
I'm just gonna keep your stuff wrong.
Job title Market Center Administrator means that we're in charge of managing the office and managing the staff, and we're in charge of the finances for the Market Center. So we go through $1 billion of money every year, and we're accountable at a really high level for that money, down to the penny. So we get finances and budgets at a really high level. So my name is Novalee Bettis. I've been at KW for 14 years. I took an accounting class in high school and I was hooked. And I have been in accounting ever since, and I am old. So it's been a long time. I worked at a commercial brokerage before they asked me to come to Keller. The team leader at the time reached out to me and said, "Hey, I have a job opening. I'd like you to come and interview." And I'm like, "I am so happy where I'm at, not interested." And she's like, "Well, just come and meet with me." And I turned her down twice, and she's like, "I've just heard so much about you. I want you to come meet with me." And I'm like, "Okay, fine, but I'm not coming to your company." And I went and met with her, and I'm like, "Okay, that's fine." We met and we talked, and she was escorting me out. And on the way out the door, she gave me a tour of the office, and we walked by the broker's office. And she said, "This is our broker, and his name is Alan Wade." Alan Wade was was a neighbor of mine, and his wife was a friend of mine, and she had cancer at the time. And I knew that she was not doing well. And I thought if I could ease Alan's mind by working at his company and keeping his books straight, I was all in, took a pay cut, and called my husband and said, "I'm going to go work for Keller Williams." And he thought I'd lost my mind. But that was 14 years ago. I'm still here. I love what I do. Not only do I do it for Orem, but I'm also the regional MCA. So I get to work with all of the MCAs in Utah. And don't tell anybody, especially my bosses, but if I could only do one thing, that would be the one thing that I would do, because I love the MCAs in the state. They are all amazing, amazing people. And to get to work and associate with them every day and get to talk to them and answer their questions or brainstorm situations, because we all face the same things, is my favorite thing to do. So I love to teach. I'd love to talk numbers. Numbers make sense to me. I do have my real estate license. I try not to use it. That life is hard for me. It's not black and white. It's like stressful for me. So I really only use it with my kids. But it does help me have a little bit more sympathy for the agents. So I'm kind of glad that I have it. Let's see, what else? I have an accounting business on the side. So when I'm not working here, I go home and I do my, I work on my accounting business with my partner. We do payroll and books for about 40 of my clients. A lot of them are top agents here in the Market Center, because I'd rather do that when I go home than just watch TV or whatever. So I guess that makes me qualified to teach this class. So Let's get started. Amy, do you want to get started?
Awesome. I did want to remind you guys, since this is CE, that you have to be on for at least 80% of the class in order to get credit. That's correct, Gordon? Okay. All right. So I'm going to go ahead and share my screen. We'll get started. Novalee and I are going to kind of tag team. Let's see. There we go. Okay, can you see that all right, Novalee?
Perfect.
Okay, awesome. So this is basic agent financials. So we're going to go over all of the basics that you need. So raise your hand in the chat if you're a business owner. How many business owners do we have on the call today? Exactly, all of us, everybody. Good job. So we are all business owners, and it's so important at whatever stage in your career that you're treating your business as a business. And here at Keller Williams, we teach you guys to run your finances and run your business the exact same way that we run the Market Center. So we're going to kind of teach you some of those fundamentals today, and go through just kind of what you need to know, how you need to structure your business. And yeah, so let's dive in. Let's see if I can get that to switch screens. Second. There we go. Okay, so your numbers tell a story. What do your numbers tell about you? How comfortable are you with your numbers, with your finances? So feel free to unmute and chime in at any time. I know there's a lot of us on the call, but sometimes it's hard to teach on Zoom because you don't get as much interaction. And I love interaction. So feel free to chime in whenever. But when you think about financials or budgets, what are some of the words that come to mind for you?
More money going out than coming in.
Okay, good. What else? Ugh, in the chat. Yep, for sure. So a lot of times talking about finances can have kind of a negative connotation to it. I know for me, for a long time, I could tell you all day long how to save money in your business, how to strategize in your business. But then if you talk to me about my budget, I'd be like, ugh, I don't want to talk about my personal finances. So I want to just help take some of that stigma away today is one of my goals. Make you comfortable in talking about finances, talking about your numbers, and really not knowing what your numbers are doesn't protect you from anything. Knowledge is power, and we want to just have clarity and full understanding of what we're looking at. Does that sound good? Okay.
Yes.
So money talks, but all mine ever says is goodbye. Do you guys ever feel like that? Always spending money. So let's start off very basic. I'm going to go over with you how to read and understand a DA. So a DA is a very Keller word. It means disbursement authorization form. Every time you have a closing, you're going to receive a DA. If you have a question on your closing, the first question your Market Center administrator is going to ask you is, what was the DA number? So we can pull it up and look at it. And I want to teach you guys how to read these so that you have a really good basic understanding every time you get paid of where all of that money is going to. And that's going to help us to start tracking our numbers and our finances. So this is a basic DA. I have redacted information for privacy, but this is what it looks like every time you get paid. So this right here, DA number, that is going to be your reference number. If you have any questions on that, or if if you need anything, that's going to be the first thing is what's the DA number? That's going to be your reference number. Then you've got the closing address for the property, the buyer's information, the seller's information, the title company that it closed at. Over here, this will tell you if it was a type of sell is listing or a sale. So this one was a listing. Sales price, this one was 1.442 million. So that's going to be the sales price listed on the settlement statement. The total commission received on that closing. And then down here in the middle, it's going to show how much of that was allocated to the brokerage, how much was allocated to you, the agent, and any deductions that came out. So this is kind of just a summary of what that transaction looked like. Do you guys have any questions on this first page?
We have a question in the chat asking where are these found?
So you get these whenever you have a closing. They will either be emailed to you, depending on how your market center does it. You'll get an email with a copy of your DA, or they're uploaded into command for you in the closed file. So you can go back to any of your past transactions and look in the closed file, and you'll be able to open up your DA and look at it.
In Orem, we upload them to the opportunity for the agent.
Awesome. So they'll be in your closed file inside of command. Awesome. This is the second page. This is the detail page. This is probably one that's the most confusing for some agents, and we get the most questions on, but this also has the most information. So this tells you here, so under type, L means it was a listing, class means it was property that was sold, the agency, this agent represented the seller. So this agent is taking the whole commission. They didn't split it with another agent or a team. So their unit is one full unit that they get applied to their production. That gross commission, that full amount we got from the title company, was $43,212. As you'll see underneath that, there weren't any outside referrals that came out. There weren't any bonuses or transaction fees that came out. There weren't any concessions paid. So that GCI, or gross commission income amount, is that $43,212. So that's kind of our starting point. Then you'll see the associate split and the royalty split. So this associate qualified for the 80% split. So you'll see that 80% went to the agent, 20% came out to go toward their cap, which then shows the associate commission at $34,569.60 after that split is applied. There's a few other things that come out. If you look over here on the second column, E&O insurance is handled differently depending on which market center you're at, but E&O insurance can come out. If you're not capped on associate royalty, you will see an amount in that associate royalty box. That amount is 6% of that gross commission. So not of the after the split commission, but of that gross, that $43,212, 6% of that until you're capped goes to associate royalties. That's going to leave you with your net commission, $34,544.60. So then down below, it just kind of summarizes what happened. So you had a $25 KW or South Valley Cares on this one, $25 deduction that came out, which made your check be this much, $34,519.60. So company commission is the amount that went towards your cap at your market center. Pay to KW is the amount that goes to your market center cap, your royalty cap, and your E&O all added up together. So that's a combined total. Written volume, closed volume, pretty self-explanatory. Adjusted volume, we get a million questions on adjusted volume. So adjusted volume, in Keller Williams, they use it as to level the playing field for award purposes, basically. And Novalee, chime in if I say anything wrong on this. But basically, if you had a $1 million, a commission on a $1 million home, and one agent took a full 3% commission and another agent only took 1%, it's going to take the volume of the 1% and adjust the volume down to make the even playing field across all of those commissions. Does that make sense? So if you're reducing your commission, it's going to reduce your adjusted volume. It's only a KW number. It doesn't go anywhere else, and they just use it for awards purposes. Does that make sense, Novalee?
Yeah, it means that you wouldn't get credit for a $1 million sale. You would get credit for what 3% would have been of the $1 million.
Exactly. And it's just an internal KW number. But just so you kind of understand what that one means, that's what's going to be going towards your KW production awards.
And
Is it
KWRI no longer uses adjusted volume for awards, but the region does use adjusted volume for awards. KWRI has changed their policy and gone away from that.
That's great.
So when I've had an agent who was here like 2 or 3 years and didn't know that there was a page 2 to the DA that had the breakdown on it. So always look for page 2 that has the breakdown. Now, if there are more than one agent on the DA, every agent that is on the DA will have their own page. And on page 1, it's going to have every agent's breakdown, every agent's detail on it. So if you don't contribute to the charity in your market center and there's a charity breakdown on the first page and you're like, wait, I didn't donate to that this DA is wrong, look for a page 2 or 3 and that you'll see that that other agent had a donation to the charity and it didn't come down. It didn't actually come out of your page, and you can go to your page 2 and see that that charity donation didn't come from yours. It actually came from the other agent. So if you have questions, always refer back to the next couple of pages and you'll probably get your answer.
For sure. A lot of times people will look at the front page and be trying to figure out how the numbers come together. And if you just go to your detail page, it's going to show you exactly what split was taken, where that went, how it was applied. And
Amy, can you go to page 2?
Absolutely. There you go.
At the very top where it says 8899, that's where the name will be that is for that page. So if that's not your name, that is not your particular page, go to the next page. And that's where your detail will be.
Great. Any questions on reading your DAs? Okay, you guys are smart. Okay, so if we want to track our numbers and we want to keep score, how do we do this? There's a lot of different ways that we can. GCI, or gross commission income, that's pretty much the amount that the title company cuts to, when you close the deal, that's the title company check. You can do your volume, which would be the sales price of the homes. You can count how many units you've done or how many closed deals you've done. You can do your net income. You can look at your money in the bank. Can anyone tell me what is going to be the most accurate way to tell if your business is profitable? Yes. Okay. Net income came through on the chat. So you can close a lot of deals, but if you're not managing your money effectively, your net income can be substantially lower. And then that is truly how you're going to measure the profitability of your company.
Having a scoreboard is so important. It's like going to a football game, and if they didn't track the score, how fun would that be? And how do you know who's winning, right? Like it just would be pointless to play the game. You have to have a scoreboard.
You have to know how you're doing. Absolutely. So we have so many reports that can help you track and know how you are doing. This one here is your associate trend report. Are any of you guys familiar with this report? You can pull it every single month and it'll be updated for the prior month. And I put down here on the bottom where you go to find this report. It's just at the mykw.kw.com, and then click on reports and then multi-year trends. And this is going to show you so much information. This is just one page of the report. It is a very large report, but you're going to be able to track all your units, your volumes, your listings, your GCI. All of your key numbers are going to be available on this report, and it gets updated the first week of every month after we transmit our numbers. Anything you want to add on that, Novely?
The importance of an accountability partner is huge when it comes to that. Every month, Amy and I, well, all of the MCAs have a financial review meeting where we get to meet with our OP and we get to report our OP and the team leader, and we get to report on our numbers and how we did the previous month. And we talk about our numbers when it comes to closed units, our profit, our expense, and if we went over in any expense category. And when an ALC member comes and says, I want to spend money on this, or the team leader wants to spend money on that, I know that on the second Monday of every month, I'm going to have to go report to Johnny if I went over in any expense category. And that sure makes me more likely to say no, because I know I'm going to be on the hook for that meeting, and it gives me power and a backbone to say no about going over expense in a certain category, because I'm going to be on the hook for that. So I cannot stress enough about having an accountability partner. If you don't have someone you're going to review these numbers with, then you're not going to be accountable to them, right? If you don't have a coach or someone that you're going to review these with, then you're not going to be as successful. So find somebody that either a coach or a partner that you can review your financial numbers with and your production numbers with. Set a date, make it set in stone, make it the second Monday of every month or whatever. You're going to have a meeting and you're going to go over these numbers. You're going to talk about them, and you will see success. That would be my number one recommendation, is an accountability partner.
Awesome. That's great. Thank you, Novalee. All right, so let's talk about what goes in. You have income from your real estate business, all of your commissions, typically 3% each side, and that'll include your listing income, your sales income, your referral income, and leasing income for both residential and commercial transactions. So that's everything coming in on the financial side. What goes out? We have a couple different types of expenses that come out on our P&L. So you have the cost of sales and you have operating expenses. Does anyone know the difference between the two? Okay, I'll tell you. That's why we're here. Okay, so cost of sales is simply the cost of making the sale. What do you have to pay because you sold a home? Just because you sold a home. So commissions paid to the office. We don't have to pay those if we didn't sell a house. Royalty fees, commissions or splits paid to employees or independent contractors, referral fees. So these are fees that happen just because we made the sale. So then what is an operating expense? An operating expense are expenses that are going to happen whether or not you make a sale. So if you are renting office space, you're going to have to pay your rent whether or not you had a closing. Your car loan, salaries, insurance, professional services, marketing and advertising, equipment and supplies, and education. So those are going to be everything that's coming out. So you've got all of your money coming in, you've got money coming out, and we're going to talk about tracking that. So what is left over once you put all your money in and take all the expenses out? What is left over? That is net income or profit that you can use to grow your company and invest in your future. Does that make sense?
Yes.
Okay, so the MREA economic model. If you have not read the MREA, literal step-by-step guide to a successful real estate business, but they have come up with some great guidelines of where we should have these numbers. And it's pretty much, it sets us up for a 40% net income at the end of the day, which is higher than almost any other entrepreneurial business that's out there. So what comes in, you've got 100% your gross commission income. What goes out, 30% of that is going to be the cost of sales, your cap, all of, those things that happen just because you made the sale. 30% is going to go towards your operating expenses. That leaves you with a 40% net income. So a real life example for that, if you get a $10,000 commission check, about $3,000 of that is going to go towards your cost of sales, $3,000 for operating expenses, and that leaves you with $4,000 as your take-home net income. So many agents that I talk to and coach about their finances, this is what their flow of their money looks like when they have a closing. So Miss Mary Realtor got a commission check for $10,000. Yay. And $10,000 of it went into Mary's personal bank account. $0 went into business savings. $0 went towards taxes. All of it went into Mary's wallet. Can anyone relate with that flow of money? So here is the smart flow of money. Same, Mary got that check for $10,000. She put 70% of it into her personal bank account, which she then saved for federal and state taxes for. And then she had $4,200 that went to her wallet. So now she has saved for her business, she has saved for taxes, and she has paid herself for the closing. Does that make sense to everybody?
We have a question. Do you include taxes in the cost to sell percentage?
So Novalee, do you want to answer that since it's a tax question?
You include taxes in the cost of sale. No. No, cost of sale is just royalty, company dollar, transaction fee, referral fee only,
Taxes are accounted for as savings.
as business expense.
Mhm. And so you'd put that into a savings account. Okay, awesome. So for a solo agent, this is kind of how the flow of money would work. You deposit 100% to your business checking account. 30% is going to go to paying your ongoing business expenses. That other 70% you can put to your personal checking account. You're going to set aside money to pay your taxes, self-employed taxes, all of your personal expenses, invest, make charitable contributions, and you should have that 40% net at the end of the day. Does that make sense? Pretty much when you talk to an agent and say, what are your goals? Novalee, how much money does every agent want to make every year?
Every brand new agent, almost every one of them says $100,000 their first year.
Almost every agent, $100,000. So that's what they want to make. So to me, that means that's what I want in my banking account. At the end of the day, I want $100,000. So that is going to be this net income number. So that means you're actually going to need to sell and have your commissions be higher than that to account for your expenses. So we want to be able to figure out very easily, what does our GCI goal need to be if our profit goal is $100,000? What is so awesome is you guys have these amazing tools at your fingertips that you can plug a few numbers in, and it's going to tell you exactly what your GCI goal needs to be, all the way down to how many appointments you need to take, how many conversations you need to have, and you guys already have it all at your fingertips. So how many of you can raise your hand, have been in the goals section of Command? Couple, not very many. Okay, so on the main page of Command, if you just simply scroll down, there's this section that says set goals. And you can just fill in this left-hand side about where you want your profit to be, what percentage is listings and buyers of your business. It's going to spit out all these wonderful numbers, and it will actually help you track how you're doing. You can scroll down and look at graphs, charts. It'll show you how close you are to your goals. And all of this you already have access to. All you need to do is log into Command and plug in what that profit goal is for you. Any questions on where to find this? Okay, main page of command. All right, so everyone needs a great finance team because as business owners, we can't do it all on our own. We need a great finance team to help us. So those should include an accountant or a bookkeeper, CPA, tax advisor, very important, know a good attorney, an insurance agent, a financial planner, and perhaps a coach or business coach. If you
I
see
get a lot of people who ask me about finding a good tax accountant and how to make that decision because I'm going to talk about taxes later on. So I wanted, if I could just insert it here, since we're talking about these people, right? There's a lot more that goes into your taxes and what kind of entity you set up other than just you. There's other people involved, perhaps there's other businesses, there could be other businesses involved, there could be dependents, anyway, so who you choose to be your CPA and tax advisor is critical. So I would ask before you choose your person, you need to ask them 2 questions. And the first is, do they do it full time? If they don't do it full time, then fire them. The tax code could fill my entire office just with the manuals. It changes every year. It's every year is constantly evolving. If they are not only doing that, they're doing you a disservice because there's no way they're keeping up with it. If that's not all they do, don't use them. The second one is ask them how often throughout the year they're going to meet with you. If they will not meet with you a minimum of 3 times, fire them. They are not the right person for you. Because throughout the year, if you're not making adjustments to your withholding, to your payments, when you're prepaying your taxes throughout the year and making adjustments to how much you're taking in a salary, and that kind of thing throughout the year, when it comes in around to paying your taxes in March for your business, you will end up paying taxes and penalties and owing, and it will not be good. Any decent tax accountant will meet with you a minimum of 3 times. So those are the 2 questions. Is that all that you do? And how often will you meet with me? Those are your 2 questions if you want a decent tax advisor.
Very helpful. Thank you, Novalee. Okay, we're going to talk a little bit about budgets. I would like to hear, okay, throw out on the chat, unmute yourself. What words come to mind when you hear budget?
Organized.
That's a good one. What else?
Allocation.
Spreadsheets.
Anything else? Well, I can tell you when I'm a recovering budget hater. When I used to hear the word budget, I would think restriction and not being able to do things. And it was stressful and it felt like a no was built into budget. It's not in the budget. It's not in the budget. No. And I just didn't even want to know what my budget looked like because it was just a negative word to me, right? No fun, right?
Lots of people in the chat are agreeing with you right now.
Okay, good.
Stress, no fun.
I'm not the only one out there. Luckily, we have a great business budget model that we can follow for our businesses. And we're going to talk about that a little bit. And then we're going to talk a little bit about our personal budgets as well. So this is the budget model from the MREA book. And it's pretty simple. It just gives you the guidelines of how much you should be spending in each of these categories in order for you to truly net that 40% income. So if you're really high on one side, when you look at this, that's probably an area to scale back so that you can get the most out of your money. So these are just the basic percentages when it comes to that 30% operating expense, you've got salaries and benefits. You've got what you're paying for your lead generation. Occupancy is like rent, communication and technology, your cell phones, your computer applications, stuff like that. Education and dues. We all just paid our board dues. That's very close to the heart, I'm sure. Auto expenses, equipment and furnishings, office supplies and expenses, and insurance. And then that can be adjusted a little bit if you have other ones as well. Any questions on the breakdown of these? Okay.
Where's the other 9 or the 10% going?
You do have other expenses as well that you can allocate for that. And then you've got your 30% up here, 30% here, and then you've got your 40% for your net income. Okay, so things don't always go as planned, right? I don't know if I am like a lot of you, but my business is down from last year, my real estate business. And when change affects your plan, you need to plan effective change. That is the best way to keep your business afloat. So the best way through a shifting market is to re-expense your business quickly. A lot of times people will automatically be just double down on lead generation or whatever it is. That is great and that is awesome. But the first thing you need to do is re-expense your business. And I'm going to show you how to do that. Trying to revenue your way through a shift is an iffy plan. There's only so much we can do to guarantee that next deal, but you have 100% control over what is going out of your account. And then you can do everything you can to bring in as much as you can, but we have a little less control on that side. So to generate revenue, you generate leads, and to make a profit, you manage your expenses. Does that make sense? Okay. So a budget is telling your money where to go instead of wondering where it went. There are some basic principles that we teach around that as far as budgeting on our business accounts. And this works for personal accounts as well. But when you have a shift, you need to drop your expenses until the inflow once again exceeds the outflow. So depending on how much your business has dropped or what's happening in the market, you've got to cut your expenses down until your income is exceeding what is going out. Sometimes that can be a significant amount. I know when we first had the market shift, when we were anticipating the market shift before COVID, KWRI had us cut our budgets for the market centers like 20%, and then came back and said, okay, let's take another 10. We need to be safe. Like that's your planning to be ahead of a shift. Drop your expenses until the inflow once again exceeds the outflow. Play red light, green light. I've got a sheet on this next slide that will show you exactly what that means. Hold each expense accountable for the return on investment. So if you're spending money on Facebook ads, you need to be tracking what are you getting from those. If you're not getting anything, you should probably try and put it in something else. Just be able to say, I know what the return on this marketing investment was for everything that you're putting money into. Renegotiate your accounts. How many times have you guys tried to maybe cancel cable? How many phone calls did it take to cancel cable? And how many times did they come up with some fancy new program that you could do instead of canceling, and it lowers your account, lowers your account, lowers your account? Most of your accounts are going to be that way. So if you are in the dropping expenses mode, go to those accounts and try to negotiate down what you're paying on those. You'd be surprised what they're willing to do to keep you as a consumer. And then find what works and make your money smart again. So when you're putting money into smart investments that have a return on the investment and they are leading you to more business, your money is smart. When there's a shift in the market, a lot of times what you were doing no longer works and you need to do something else. But if you don't reevaluate that and you continue to pump all of your money into what you have been doing, your money's not smart anymore. So you need to stop, maybe make a shift in how you are lead generating or reaching out to your sphere, whatever it is that you're doing, and find what works and make that money smart again so that your money is working for you. Does that make sense to everybody? Okay, this is the red light, green light kind of activity. This is a personal budget, and you can do this for your business as well. Same exact type of thing. You're going to put in all of the different things that you spend your money on. And then you're going to put how much in the $ column. How much are you spending on that item? And then you're going to classify it A, B, or C, red, yellow, or green. So A is absolutely essential. Like, I cannot go to work if I don't pay for daycare for my children, or whatever that is. Absolutely essential. B is, this is really nice and I would prefer to keep it. And C is not essential, cut immediately. So this is very good. I would say at least quarterly to go through your budgets, personal and business, and do this activity through them. Novali, you had something to add on this slide, right?
I did. I was on a call with Jason Abrams. You've heard him speak at Family Reunion, but I was on a Zoom call with him the other day, and he was talking about this activity, but kind of a different version of it. So I led our agents through this in team meeting the other day, and I gave them 3 different color highlighters. And then I told them to go home and to print off their all of their bank transactions for their personal accounts and credit cards, and I made them commit to me that they would go through and highlight every single transaction for the last 30 days. And if it was something that was essential, like their mortgage, anything that they absolutely had to keep, they highlighted it in one color. Then the second color was for anything that they wanted to keep. However, if things got really bad or their income dropped below a certain point, they would be willing to give that up. They highlighted it in a second color, but they had to write it off to the side, like, by a certain date, if things don't get better, I'm willing to give it up. They had to write the date. Or if my income drops to a certain point, and they had to write that point out there, what that point was, they'd be willing to give that up. That was the second color. The third color was, I don't know what that is. And they had to commit to me that the third color, anything that was the third color that they didn't know what it was, they had to cancel it immediately. And then Jason said he just waited. You just wait and see what happens and see if anyone notices. He said nobody noticed anything for over 48 hours. Anything was missing. And then his little boy came to him. I think he said he was about 10, ran out to him the other day. My guys are gone. My guys are gone from some video game. And he was all distraught. And he said it cost him $150 to get his son's little guys back. $150 a month for his little boy to keep his guys back for his video game. The amount that he had cut was $1,000. So he saved $850 and nobody noticed. So I wonder sometimes how much is out there in expenses that we don't even know what they are because we haven't paid that close of attention. So sometimes they just sneak in there, right? Charges like that, and we just don't pay attention. Sometimes it's a good idea to just print it out and look at it line by line by line and see what's there that might be sneaking through.
Absolutely. Okay. What's next?
And we got cable, and I was afraid I would miss HGTV, and I don't. So there you go.
So I thought I had some money and now it's gone. So I want to talk a little bit about our attitudes around money. So I'm going to get personal and tell you a little bit about me. So I came from a very, very not well-to-do family. And we had a lot of kids in a little tiny house, and everything was a struggle. But the attitude that I learned as a child about money was you don't talk about it. It's kind of shameful because we don't have enough of it. And it's just not something that you want to bring up. It's kind of shrouded in secrecy to an extent. So I kind of, once I hit that 18-year-old mark and people started sending me credit card applications and you're pre-approved for $500. I'm like, oh my gosh, $500. This is so neat. So when I first started school, I immediately got like 3 credit cards and didn't really understand what all was going into that. And I had the mindset of, if you can afford the monthly payment on something, then you can afford it. So if I can make all my monthly payments every month, then I'm doing okay. And that was how I viewed money. And that was how I budgeted at that young age, which was nothing of a budget. But basically, am I making enough to make the minimum payments on all of these things that I've now financed? So I wanted to show you a couple slides to bring in perspective kind of how that view of money is affecting us right now. So 48 million Americans carry a balance on credit cards right now. 48 million. That's a
We've
lot.
got one question before we move on. That spreadsheet that you had in the last slide, is that going to be available digitally?
Yes,
Okay, great.
absolutely. The average household has over $16,000 in credit card debt. And most households, our average credit card month to month balance is $5,700. So that's a lot of money out there that people owe. I mean, has that debt hole. Here's another interesting. How many drivers are paying $1,000 or more each month on their car payments? Utah is right below Texas. I believe we are at the higher end of 2.5%, but maybe it was under 3%. Yeah, 2.5% of people that are paying over $1,000 per month for their car. Now, I like nice cars as much as anybody, but that's a lot of money. And if you have debt that you're carrying over month to month and you're paying over $1,000 on your car, that's a lot of money going out the window. So again, personal story. So when I got married, my husband and I wanted to buy a house. It's reasonable, right? Well, I found out really quickly all those credit cards from when I was in college made it a little difficult to get approved for a home. So we paid those off. We got into our house, but we kept that mentality of, if you can afford the minimum payment, then you're doing good. And over time, we accrued lots of toys and lots of things. And whenever my husband would say budget to me, I would cringe, because that's just, don't tell me I can't spend any money, is my attitude toward budget. And it became a real thorn in our marriage that we could not talk openly about money and finances without it being a negative thing. And caused a lot of issues. Again, it was shrouded in shame and we just didn't want to talk about it. And my husband would say, we make way too much money to be this poor. And that is so true, I think, for so many people. And so what we did, I was at Keller Williams, and we had Dave Ramsey's Financial Peace University come in and teach a class. And my husband and I said, okay, look, we are going to buy into this 100%. No matter how painful this is, we're going to do it, and we're going to get out on the other side, which required lots of talks about budgets. And we did quite a few things, and I'll go over some of them with you and kind of show you how we did it. And it took us probably about 3 years. Well, the first activity we did, we wrote down everything that we owed money on. So if we were making a payment on something, what was the balance owed? Everything, car payments, four-wheeler payments, RV payments, credit card payments, every single thing that we owed money on, we wrote the balance down and we put it in order from biggest to littlest. And when we totaled it up, this is not including our house payment. This is just consumer debt. We had over $110,000 of debt that we had financed ourselves into. That's a lot. And that's a lot of monthly payments going out. And that was a lot of vacations that we couldn't afford to take. And we're like, why can't we afford to take these vacations? Because we were paying so much in minimum payments all over the place. So a few things that we did that worked for us. The very first thing we did was an emergency fund of $1,000, which is not too bad, just enough to cover anything that is crazy. The hard part is we had more than that in savings. But we took what other we had in savings and we used it to pay off debt. We used the debt snowball plan. So basically, you take that list of all of the debts that you owe and you start at the smallest one. And you say, okay, I owe $400 to RC Willie. So you work extra payments till you pay off that $400. Well, now I'm not paying $30 a month toward RC Willie. I'm going to take that extra $30 a month and I'm going to apply that to my next one. And you're going to do that until that one pays off. Well, now I'm not paying an extra $130 because I paid that off. So I'm going to take that $130 and put it on my next one and snowball your way through paying off your debt. Simplify your debt. So we had 3 teenagers at the time, and they were super happy with us that we got rid of our fancy, nice phones and we got crappy little cheapo phones. We got rid of our cable. We got rid of our home phone, and we got rid of so many subscriptions, anything that wasn't a must-have. We also looked at anything we were making a monthly payment on. And if we couldn't pay that balance off in a year, we looked to downsize it. So what that looked like for us is my husband had a really nice fancy truck, and we sold it and took the equity. And the equity that we had in that ended up buying us a 1995 Chevy Tahoe. Super nice. That was hard. It was really hard. And then we saved up money. I had a car lease. I had a nice car on a car lease. We waited out to be out of that lease, saving money. And as soon as that car lease, we were out of that, we took what money we had saved, and that was the budget for my car. And so I had a little VW and it was fine, but we got out of those car payments. Our car payments were probably almost $1,400 a month between the 2 cars. So now we saved $1,400 a month, and we threw that into our debt snowball. Another thing that we did, we had an RV that we loved and we camped with all the time. And we didn't want to get rid of it because that was our alternative to expensive vacations while we were in debt payoff mode. So we had to find a way to make the RV pay for itself. So we listed that baby on RV Share and we rented it out, and it completely paid itself off in 1 year. Then we pulled it off and it was just ours. We used it the weekends it wasn't rented. So anyway, you can try to downsize what you have or make those sacrifices and get rid of the things that you don't absolutely need, but just really want in the short term is going to be much more helpful in the long term. Once your debt is paid off, you just increase your emergency fund till you have at least 3 to 6 months of your full monthly expenses in savings. And you need to tell every dollar that comes into your account where to go. So your budget should be 0 at the end of the month, not because you spent every dollar, but because you told every dollar where to go. You allocated for what bills you had, for charitable donations, for savings, for investments, whatever it is. At the end, your budget should be 0 because you are accountable and have told every dollar where it should go. Do you guys have any comments or questions or anything on that?
Great advice.
Thank you. I have a little activity I want you guys to do. Let's see how much money is hiding in your phone. We did this at a regional event and the winner saved $110 per month in our regional meeting. So if you have an iPhone, I'm sorry if you have an Android, I'm not quite sure how to do it, but if you go to settings and you tap on your name and click on subscriptions, it's going to bring up a list of all the subscriptions that you're paying for every month. Look and see, do you have duplicates? Do you have stuff you don't realize that you're still even paying for? Let's see just real quick. Is there, who could save the most money by just auditing their subscriptions in their iPhone? Does anybody have anything in there that you're like, oh my gosh, I didn't realize I was paying for 2 Netflix accounts, or I've been paying for this one app that I used one time and I haven't used it for 2 years. I didn't realize I was still paying for it. Does anybody have anything in there that they can share? Got a lot of nothings on the chat, which is great.
Yeah, Amy, I was a bit nervous actually, but fortunately I don't have anything. I think I
Oh,
kind of
good.
took care of that a while ago, and I cancelled those, so they're expired and not renewed. So I'm kind of wiping away a bit of sweat right now, thankfully.
Good for you. That's awesome. Kimber, when we did this as a region, didn't you find some stuff in yours? Maybe she's not. Anyways, there are a few popping up here of people finding them, but it's amazing how much money we can spend not even realizing that we're spending the money. So that's a good thing to kind of keep track of and look at. Okay, so let's just review this a little bit. To know your financial score, we need to be leading with revenue. We need to play red light, green light when we need to, and we need to stick to our budget. In the end, we end up with profit. With profit, we can invest it, we can distribute it, we can grow it, we can save it, we can donate it, you can invest it in yourself, you can reward with it, and you can thank with it. So at the end of our, oh gosh, it was about 3 years of our debt consolidation craziness of just trying to get out of debt. What we did is we took and made one of those cute little kindergarten style colored paper chains, and each chain was $1,000 worth of debt. And every time we paid that off, we let the kids rip off a chain until all of those chains were gone. And we were able to save up and get out of those clunker cars and into nicer cars. But again, if we couldn't pay it off in a year, we didn't buy it. So we had learned about staying out of debt. And then now we've gotten more into investments, and we have Airbnbs, and we're being more intentional with the money that we're spending and the money that we're making. And it isn't a shameful discussion. And I try to talk very openly with my children about finances, which was very different from what I was used to. And just last year, my 21, she was only 20 at the time, but my 21-year-old, we helped her buy her first house. And it was an investment for all of us. And she's living in the basement, and we're Airbnb-ing the up top. And she went through the entire process of how this all works and what you need to save and what we need to cash flow to have that be a positive investment. And I think it is so important to involve your kids and teach them from a young age these good habits and what they should do with their money.
I think those kinds of classes should be mandatory in high school. I think that they may touch on it, but they don't teach it at the level that they should. Those are life-changing skill sets that the kids need to learn. We did that. Our kids all played two sports in school, and and they couldn't work, right? And it was really expensive. We sat them down once and said, look, it costs more to feed you guys than it does to pay our mortgage. Like, and plus we're paying for your athletics. Like, this is what our budget looks like. If you could help in some way contribute to what these expenses are, we just wanted to make you aware of it. We're not, we're not complaining, but we just so you're aware, this is what it costs around here. And those kids that we did that with are my best budgeters. They're my best kids with money now at this stage. Because they really picked it up at a high level, and I'm really glad we introduced it to them at that age.
For sure.
And they
Yeah.
all of my kids now have rental properties, because I started at Keller, and they at a young age they understood the importance of rental properties and started acquiring them at a young age. And I wish, like, I was 40 years too late, right? But I'm grateful that for the privilege and the skill set that we learn here, that we can introduce to our kids at a young age and get them started on that kind of a process.
Absolutely. And it's interesting during that, that 3-year time where we were paying things off, our income didn't change that much. It was totally how we were, using it. And I remember when we booked our first vacation after that, one of my kids said, "Oh, so we're not poor anymore?" And I was like, you know what? It's no, because we now know we're telling our money where to go instead of just watching it go. So we can do with it what we want to do. Okay, so here's a few bank accounts you should have set up. So make a note of these. If there's any that you don't have, make note, you might want to set those up. So business checking, business savings, business credit card, potentially a business credit line, and personal tax savings. Personal checking, personal savings, personal credit card, and investment savings. I have so many bank accounts because we've broken out into, a travel fund goes to its own separate bank account. We have our Christmas fund goes to its own separate bank account, and we have a bunch of different ones that just we allocate money to every month that are just kept completely separate. But this is a pretty basic list as a business owner of some accounts that you should have. It says, I've got all the money I'll ever need if I die before 4 o'clock this afternoon. Okay, Nova Lee.
I agree with
Teaches about setting up businesses.
Cool. I kind of think that we should have talked about this before we talked about that, the bank accounts and that kind of thing. So are you going to run slides for me, Amy?
Yeah, I sure can.
Perfect. That would be great. So let's talk a little bit about business and getting your entity set up if you haven't. There are 3 businesses that are probably the most common. Sole proprietor basically just means you're running it under your social security number. So there's not really a lot of protection for you, and very little tax benefits for you. If you go that route, an LLC is probably the most common, and it's the easiest to set up. You can do it in about an hour and a half, just by going on to the Utah website. There are some tax benefits to that and some protections. The one that most of the top producers are using is probably an LLC that is set up, functions as an S corp for tax purposes only. It's a 1-page document that you convert your LLC to just for tax purposes. But the most important thing is don't make any of those decisions right off the bat. First, you've got to meet with that wonderful tax advisor that you're going to pick, and You're also going to just get your feet wet into real estate, see how you like it. Is it going to be something that you do on the side? Are you jumping in with both feet? It's going to be all that you do. And it's going to be your main source of income. You don't have anything else going on. So before you choose an entity that has, if you choose an entity that has tax consequences, discuss them with your tax advisor first. Every entity has tax consequences. They all have consequences as far as protection for you liability wise, and don't rush into a decision because you do need to make realistic projections. And sometimes this is where I disagree with a lot of team leaders, because they'll say, get in, get your LLC set up, get your S Corp declared and all of that. And I hesitate to have people do that because number one, there are a lot of responsibilities. If you declare your S Corp, you have to have annual minutes, you have to start doing payroll, you have to have someone do that for you. You can go to jail if you don't do that correctly. Like there are major responsibilities before you get to that point. And there are some other things that you can do before you need to get to that point. So just slow down, get your feet wet, get a deal or two under your belt, and then meet with your tax advisor, choose the right person, let them help you make that decision instead of making it on your own. That would be my number one advice. So remember those two questions that I gave you earlier. So I wanted to discuss them earlier and then discuss them again now because they are so important. What were the two questions I told you you needed to ask your tax advisor before you chose that person?
Is it full-time and how many times are you willing to meet with me?
Oh, very good. A for you. Good job. Good job.
We've got
Okay.
one question
Okay.
in the chat. Clayton asks, I'll ask a pro also, but can we claim expenses that occurred this year before we set up an LLC?
Yes, if they're allowed. Depending on, do you have a specific one? Like, are you talking about like a basic expense? Like, give me an example of the expense. Clayton.
Oh, I'm just talking about any of the fees that we've paid, maybe mileage.
Like,
gas,
yes,
any
all
other
of that
inputs
can be declared by a sole proprietor and written off. Yes.
prior to actually setting up
Yeah.
an LLC or an
Yeah.
S corp.
Yeah,
Okay.
absolutely. Okay, Amy.
Okay. So this is just a little more information on those entities.
Yeah, so sole proprietor means you're just running it under your social security number. You get all of the profit after taxes. You're responsible for the losses and debt, personal assets. Yeah, we talked about all of that. It's just you claim the income on your personal tax return, but you could also claim those expenses on your personal income tax return as well. For sole proprietor. The LLC, this one introduces, that's the one that you can set up or pay someone to set up for you. It's very basic. It does do some protection for your personal assets. What I like about it is there's no commingling of your business and personal money. This is a very important. That's why I recommend you start with this one after you've chosen your correct tax person. Is you set up an LLC. That way your commission goes into your business account and you're not commingling that with your personal money. S Corp does offer the best tax benefits. But there are a lot of responsibilities that go with an S Corp. It's basically the LLC. You file a document that says for tax purposes, I want to be an S Corp. But you have to do payroll. You cannot do payroll yourself unless you're very well trained. You go to jail if you do that wrong. You have to do annual minutes. And you have to do a bunch of things. Like this is a big deal. It's real. You have to function correctly. Otherwise the IRS will deny it and then they'll take away all your tax deductions and then you owe a really nice large chunk to the IRS, and I don't want you to be in that situation. Some of the tax benefits of an S Corp that you have to have an annual meeting. So my business is an LLC. I have filed my letter, so I function as an S corp for tax purposes. Your annual meeting can be held anywhere. My partner in my LLC happens to be my daughter. Every other year, we hold our annual meeting in Anaheim. So our travel to Anaheim, which is right next door to Disneyland, is thus tax deductible. Not our tickets to Disneyland, but our trip is then for my daughter and I is tax deductible, right? Because it's the travel to our annual meeting. Like there are benefits to being an S corp, that kind of thing. But there are also responsibilities for being an S corp that you have to fulfill. And so I just want you to understand you have to do. So someone told me the other day, well, I write myself a $1,500 check every month. That's counted as payroll, right? No, bless your hearts. Payroll means payroll, withholding FICA, withholding federal unemployment, and submitting those tax returns on a quarterly basis to the IRS, to state unemployment, all of those kinds of things. Those are official, and they get really mad if you don't do it right. Any questions on that?
Yeah, I have one, Nobly. Are there any rules dictating where you can and can't call your annual meeting? Like obviously you go to Anaheim, but I'm not going to say, I need my annual meeting in New Zealand where I'm from, but do you have to have a reason to go to that place, or can you call it anywhere?
I am not aware of any reason that you could not ask your tax advisor, because I'm not your tax
Okay.
advisor. Mine did not tell me that. I cleared my location. I would clear your location. Man, I'm jealous.
Yeah. Let's all have our annual meetings in New Zealand. That sounds
Yeah.
wonderful.
Let's all go there. It's
Good for you. Okay.
Nobly, should we take like a 10-minute break before we get into inspecting our numbers, do you think?
Yeah, let's do that.
Hey,
10
let's,
minutes. So it's 2:14. Let's be back at 2:25.
awesome. Go just a couple more minutes and we'll dive back in.
Back.
All right, should we pick back up?
Sure.
Sounds good.
This is still you, Miss Novely.
Hey, inspect what you inspect what you expect. I wish we could portray to everybody how you and I feel when we walk into those financial review
Oh my
meetings.
gosh. Yeah.
And that they could have that level of accountability with their numbers, right? Because it would make all the difference to have that level of accountability, right?
Mhm. You become very intentional with the money you spend when you have to then defend why you spent that money.
Yeah, right. And whether it's the money that you spend or the appointments that you held, when you know, like, I don't know how many of you know Johnny or Boyd or those OPs, but when you know you're going to have to walk in and defend every one of those numbers, like, that's a high level of accountability. Those gentlemen are they're strong-willed people, and I have tremendous respect for them, and I don't want to let them down. So gosh darn it, if I could will anything to you guys, it would be that you would find an accountability partner and have that level of accountability with your numbers, whether it's your prospecting numbers. Well, I would love for it to be your prospecting numbers and your financial numbers as well, because that leads to success. So anyway, drop by your MCA's office and ask them to see their financial review packet and look through that and see the kind of accountability that they have once a month. And I think you will be surprised. Okay, so we will send, this is another thing that we will send out as well. It basically is an Excel version of a profit and loss statement. You can just, instead of paying for QuickBooks or whatever, you can just plug your numbers into here. Your income goes into the top, whether it's a listing, a sale, or referral. I created this a couple years ago. Gordon, if you could remind me to send you this in Excel format to send out to everybody. The cost of sales would be the company dollar royalty if you had a buyer's agent, listing agent on your team, or referral would come out of that. That's the cost of sale deduction that we talked about, and then your expenses at the bottom, and it shows your net income. Cool.
No,
So
I had an agent that was
anything that you guys want to send out, I'll put it up in a Google folder and send that entire folder to everybody that's on this call.
that'd be awesome.
I had an agent that was on our ALC, and we really like our ALCs members to all have P&Ls every month. And we like to be able to talk about those and hold each other accountable. And I had an agent who was so overwhelmed with putting together this P&L, and I had her come in and meet with me, and she had all of this paperwork and stuff. And I said, let's log on to your bank and let's download your statement to Excel. Let's categorize each of your expenses from the last month and each of your deposits, and then plug it into this, and then it pops out your number at the bottom. And she was so surprised at how simple it could be to have an accurate and up-to-date P&L without it being a massive thing or paying for an accountant or being so overwhelmed. It can really be broken down into a simple process. And this one is already set up with the Keller Williams chart of account. So it's going to feed right into that expense percentages that we talked about before.
Awesome. It will tell you how much you spend at Starbucks. Yikes. Okay, well,
Tell you things
need
you
to
don't
add
want to
it-
know, but need to know.
add a line for Kimber for Starbucks.
Yes.
You need to know.
Okay. Thanks. If you have any questions on that, go to your MCA, they can help you.
Oh,
Nick.
I need to change the slide. I'm just
Yeah.
waiting. There you go.
Okay, I don't know if I have this one. I know I have the other one. This is another version of the same thing. But this one will compute the goal percentages from the MREA. So it will tell you if you're staying in line with the percentage goals from the MREA. If you're staying in line with what the MREA says you should be spending in each category. I don't know if I have this one in Excel, but I will look. And if I do, I'll include it in the Google Drive. And if not, we'll include this slide.
Great.
Cool.
Is that out on the One Thing website?
It actually, that might be where it came from.
Let me go look.
Okay. Financial definition. So Amy covered these earlier, so I don't think we need to cover them again.
All right, let's skip over to the next
We'll
one.
skip that one.
Everyone's
All
favorite
about
one.
taxes, everybody's favorite subject. The hardest thing to understand in the world is income tax. I went down a rabbit hole yesterday because I Googled, and if you ever want to have nothing to do for 30 minutes, just Google quotes on taxes. I wasted 30 minutes yesterday, and they were quite entertaining. And some of them were rather rude based on certain presidents. But anyway, I laughed my head off for a half hour. But then because some of them were quite amusing. But that's why I made that comment about having someone who just specializes in that, because they are so hard to understand and so complex. And if you have the right person who knows what they're doing and can coach you in advance for tax planning and not just too late, because if you meet with your tax person in April 15th, and that's the only time you met with them, it's too late. Right? You can't do anything about it if you meet with them in April. But if you meet with them throughout the year, you can make adjustments. And I've had agents come in November and say, my CPA said I need to buy a new car. So I need everything in my savings account released to me because I have to buy a new car. Because if I buy a new car, I'm going to owe $30,000 less in taxes. Well, you know what? What a great CPA that, number one, had coached the agent into saving that much money. Number two, had met with the agent in advance and told them in advance enough that they could do something about it. What a great relationship and a great CPA that person had. Right. So they knew their job. So I thought that's a positive, because if they would have told them on April 15th, like, it was too late, you can't backdate it, right? Something like that. But they knew in November. And they were able to do something about it. So kudos to that agent for picking the right tax person. But it's as much tax planning as it is filing the right tax return. So there's different types of taxes. There's income taxes, which we've been talking about. But also, as an agent, you're an independent contractor. So any you will be paying self-employment tax on the income that you take that is not W-2 unless you have your entity set up, and then there's employment tax. And that's what you pay your W-2 when you set yourself up as an employee. So there's 3 different kinds of taxes. Okay. Deductible business expenses must conform to the rule of regularly and exclusively used in the business. So let's talk about a home office. So they've changed this rule. So now they just give you a flat fee for an office deduction. But when it comes to a car, like unless you only use your car for real estate and you never use it for anything else, you cannot deduct 100% of your vehicle. So, they used to, like your computer, you cannot deduct 100% of your computer unless you never do a search for anything that's not business related. And that's what it means by regularly and exclusively. This is a checklist for tax deductions. So do you think that accountant fees can be deducted as a tax deduction?
Hearing yes in the
Wait.
comments.
Only
Amy,
from,
I think we missed one. Did we miss one?
like,
Where's the one that had the 3 columns?
I don't have it.
So maybe can we go ahead one? There should be one that has 3
This one
columns.
has-
Maybe we missed it.
maybe we
Okay,
missed-
never mind. So these are, I believe, all tax deductions, but I have a list of ones that are kind of, some of them are and some of them aren't, like account fees can be deducted, automobile, gas and insurance, some can be deducted partially, but not fully. Business cards can be deducted, cell phone, partially. What about clothing? This one gets people every time. What about clothing?
I get asked a lot about that one.
The manual says no. Manual says that clothing cannot be deducted, and I disagree with that. But it's specific. So when it comes to clothing, if it's monogrammed with your business, then I say you can write it off. But if you go down to the mall and buy a cute shirt, you cannot write it off. That's Novalee. Go talk to your CPA.
You don't want to see how many KW t-shirts and sweatshirts I own.
Yes, right. So if it's
Wonderful
like
tax
that, then
deduction.
yes, you can write it off.
What
Computer.
about gym memberships, Novalee? I get asked that so
All the
often.
time, and manicures.
Uh-huh.
I get those all the time. No, they are not tax deductible. So sorry. Computer. Only if you use it exclusively for business and never search for anything that is not business related. Good luck trying to prove that if the IRS walks up and asks to see your search engine. Health insurance. The manual says no. If you have your LLC set up as an S corp, you can deduct your health insurance. But only in that situation. Your home mortgage cannot be deducted. Membership in professional organizations. What do you think? Like Women Council of Realtors, right? Absolutely, you can write that off. Board dues, absolutely, you can write that off. Gym membership, no, you cannot write that off. That's not a professional organization. Travel to family reunion. Yes, you can write that off.
Mega camp is next week.
Mega camp is next
Expenses
week.
while you're there.
Absolutely, you can write that off. Vacation. Yeah, are you going to hold your annual meeting for your S corp while you're there? You may can write off that travel and one night for your hotel. Be creative, talk to your CPA. Website fees. Yes, you can write that off. Your CPA. Anything on that list? Yes, you can write that off. Although I don't know why it says small tools and equipment. I mean, you'd have to be a contractor to write that off. I can't write off a power tool. I'm not going to use that in the course of my business, so I don't know why that's on there. But QuickBooks, yes, I can use that. Adobe, whatever, I can write that off. I don't know why it says security. Like, I don't know what kind of person, like, I don't know.
There's been times I wouldn't have mind having some security at an open house.
True.
Totally. What about things, something like, what do you call it? Like, you know, like on your computer, sorry, I'm feedback, but like, virus catchers, I can't think of the word.
Yeah, that's software. I would write that off. Yeah, I would write that off. Now, if you do staging, you should be able to write off any tool that you use for staging. Like, I'm an accountant, so my list would be different than your list, right? As far as what I write off. Like Liz Carter, she posts the software has to be specific to your real estate business. That's absolutely true. So what is specific to your business is different than what is specific to mine. And so what you would be able to write off would be different than what I could write off.
It would be hard for Novalee to write off a Home Depot charge. And
Yeah.
yet for like listing prep or something, I write those types of things off all
Yeah.
the time. So yeah, it'll
Yeah.
be very specific to you and what you do.
Like this year, I did help my kids sell 3 houses. So I did have some staging expenses this year, which is very unusual for me. But I also have commission income this year that I rarely have. So, yeah.
We had someone ask if you could write off a country club if you're using it for conducting business.
Okay, so that one, I think it depends on who your tax advisor is and how he would structure that. I'm going to say probably, but talk to your tax advisor. Document what property you're using the staging at the first time. That's good advice. When you, well, I use QuickBooks, right? So whatever expense I use, I usually try and write off at what location. Or client, if it's for a client, I would try and write that on the memo line so that I can track it backwards. Okay, Amy, what's next?
Okay. So next I want to talk about some of the action steps from what we've talked about today. And then I want to open it up for questions and ahas. And let's kind of go through all of the questions that you've come up with over the last couple hours. So action steps, if you haven't done any of these, write it down. Set a deadline. Let's get them done. So set up your business entity. Open up your additional bank accounts for expenses, taxes, other savings. Download the MREA chart of accounts. Purchase and download tax accounting software. You can do it in Excel, but again, it's a tax write-off if you want to go ahead and do the QuickBooks or whatever. Hire an accountant, CPA, an attorney. Very important. And Novalee's given us great guidelines on how to do that. Set up a simple system to track your business expenses. Again, it can be super easy. You can just download that statement right to Excel and track it through that if you need to. Complete your P&L each month. I would add to that, not only to complete it, but have a set appointment with an accountability partner where you're going to review your P&Ls with each other. That way it will get done. And as you're doing it, you have that accountability in the back of your mind as to, oh, this is going to be over budget. I need to make a note as to why I needed this. It just makes you more aware of what you're spending. Set aside a time each month to review your financials. Set an annual appointment to set up your budget for the, I don't know why there's the 9 there, for the upcoming year. there is a sample budget in here. Go through, plan what you think you're going to have for next year and really tell all of that money where you need it to go. Set dates to calculate and pay your estimated taxes. And download the IRS Schedule C and review it. Be familiar with the items that you need to know for that. Okay, let's open it up for some ahas and some questions on anything that we have gone over today.
Any CPAs that you can recommend?
I have a good one in Alpine. His name is Daniel Welch. Just Google Daniel Welch Alpine and he will come up. And he does meet multiple times throughout the year and he's great at tax planning and projections. He should give me referral fees for how many people I've sent to him. I'll have to, but he's excellent.
Hit him up for that.
Yeah, Shannon David down in South Jordan's pretty good too. She's right off of Redwood Road, and I think is it West Jordan? I don't know. Anyway, like Redwood Road and like 7800 South. It's like a little, she's in a little office there, but she's awesome. She's done our taxes now for the last 3 years. She helped me with foreign income exclusion stuff when nobody else seemed to know what that was. And
Is that
so
David?
Jana David, yeah,
Always referrals are awesome.
yeah, she's amazing. And she's a big England buff, has all this like England stuff, little miniature mini cars in her office. She's totally a trip, but she's really, really good and she's really cool. Like her a lot.
Awesome. I would say it's important to make sure that you do have an accountant that is familiar with realtors.
Real estate,
Yes,
absolutely.
real estate specific and what you can do and can't do.
I threw it in the chat for you guys as well.
Perfect. We did have a question. What is the threshold that we should be paying quarterly taxes opposed to annual taxes?
And so again, that you have to take into account on that what other situations are going on in your life. Do you have a partner? Do you have W-2 income? Do you have all of those other things? Like it's not something that's decision that is made in isolation. So that's why I think it's so important that you meet early on when you start in real estate with your CPA to make that decision. And there's just too many other things that could come into play for me to give you a general answer on that. I am not taking on new clients because I'm old and I'm trying to get rid of the ones I've got. I'm not. I love the ones I have, but I'm maxed out at 40. The ones I have, I love, and I'm maxed at 40 clients. But thank you for the request, Graydon. But I will give you my partner. She might be my partner in my business. She might be. And her name is Jen, and she's awesome.
Right. And there's some other great recommendations here in the chat as well if you need one. And I'm sure your MCAs at your local office all have people that they have worked with and can recommend.
Yeah,
as well.
most MCAs will have, because we hear the bad and the good, right? So I know who I would not refer my agents to. So, and I don't do taxes, but I do bookkeeping. Well, for my wonderful 40 people.
40.
Anyway.
What other questions do we have?
I've heard great things about Mark Kohler, and his name is in the chat.
I've really liked Tusher Woolpool in Draper. He's been doing my taxes now for 20 years.
Gordon, when you send the slides, the chats don't go with it, right?
If you send me the slides, I can put them in that, everything in that Google document or the Google folder to send out to everybody.
Okay.
Also
Amy,
in the chat, there's 3 dots that say more, and you can save the chat there.
Perfect.
Amy, can you do that?
Yeah.
Okay. We'll send that out and I'll find that Excel spreadsheet, P&L, unless you have it. Do you have it, Amy?
I'll look as well and see if I've got it.
Okay, I know
I
I have,
at least had part of it to add in here. So
I created that like 5 years ago. So I probably have it somewhere.
So tell me some ahas. We want to improve this class every time we teach it. What are some things that you learned? Maybe something we should spend more time on next time. Tell me what you guys got from today.
Well, I really appreciated adding on the accounts to, divide up the expenses, and that was good. And I liked, really liked seeing how it was allocated on the graph that you showed.
Great.
Let's see if I can.
What else?
The thing I really got out of this was that there are so many moving parts to this business, right? There's more things than just getting a listing and showing a house and having a buyer broker agreement with a buyer. It's kind of overwhelming, and I could see where once you're like, armpits deep in it and in the business and that, you really kind of need to have a staff of sorts that help you keep things sorted out. Because I mean, basically, otherwise your business turns into the three-legged cat in a room full of mice, and there's no way you can keep that organized.
And everybody has their specialty, right? Like I am not a good real estate agent. I'm not. But I love the numbers, and I feel like I'm really good at this side. So of having everybody excel and the stuff that they're good at, if you can have an accountant excel at their portion and you go excel at your portion, it just means everybody's doing the best that the stuff that they're really good at, and everybody is just going to perform at such a better level.
Right. It's like the master of your trade instead of being jack of all trades.
Absolutely.
We had some comments in the chat. Can't wait to try out the spreadsheets and tools that you showcased. And it's super important to run your business like a business and not a hobby.
Very important. Those are great. Anything else? Any other ahas? One thing that I find when I meet with new agents a lot, it's really hard to not want everything all at once, right? They want, they want to do it all at one time. And I think even in our lives and in our families, we do that as well. We see where we want to be and we want to be there right then. So there's this cute video that KW put out, and I love to add it into this class because for me, it really sets your mindset for where you need to be able to really succeed and get all of those things you want. I'm going to play this for you. See if it auto plays. It's called The Story of Strings. Let's see if it goes. Nope, hang on. Figure out how to make it play. Uh-oh, I needed Kimber, my tech girl, to help me play this.
Is it not playing or not playing sound?
It's not playing, but it played on my presenter mode. But now it's just switching to the next slide.
Click on the watch on YouTube and see if it opens up the web browser, and then you can just share that screen.
Oh, I can click. I've got the YouTube link.
And then just make sure on share screen that the share sound box is checked.
Let's try this. Can you guys hear the sound?
Yeah, now we just need to share the web browser screen because we can just see the presentation.
Gosh, you're so picky. You want to see? It's going to be this one, I think. Okay.
Perfect. And then, yeah, make it full
Oh,
screen
wait, hang on.
before you push. play.
Un momento. I actually did the wrong one.
This video is a good video. It's worth all of
Why does
it.
it keep sharing the same one? Can you see the,
Yeah, we can see the YouTube thing.
oh, you can? Okay.
Yeah, so I would just, before you click play, just make it full screen. And then, yeah,
Now you can see it full screen?
yes.
Okay, I'm trusting you. I'm gonna click play.
This is the story of streams. I want you to imagine that your life force is made up of streams. When you want to accomplish something, attain something, do something, you simply send out one of your streams, and then your life is automatically pulled towards that. So imagine that there are two motivated people who both realize this truth. One individual says, I'm going to focus on one thing at a time and see how that works for me. And immediately and predictably, his life begins to move towards it. Now, the other individual says, I also want to do a lot of things and accomplish a lot of things, and I just need to get after all of it right now. So he sends out 6 different streams at one time and immediately and predictably starts moving towards each of his desires. But he doesn't understand he is going to be denied. Why? Because his streams are pulling him in different directions, and he's going to reach a point where he simply can't get any closer. The competing tensions will simply slow him down. What about the other individual? Well, he ultimately gets pulled all the way to whatever he wants. He attains it, then he immediately picks another one and attains that. And then he picks another one and attains that. You see, the challenge we each have is recognizing this simple truth. We can achieve mastery sequentially, but not simultaneously. Tap into the transformative power of clarity by focusing on what matters most.
Okay, so I challenge you guys, pick your first thing, pick one action item from today that you're going to throw your string around and pull yourself towards that is going to change your business and help you with your financial goals. And I wanted to share a couple quotes here from just the chat really quick. Super important to run your business like a business and not like a hobby. Attacking the P&L monthly instead of annually will be helpful. A great quote, what I heard today was, if you treat your business like a hobby, you'll only get paid like a hobby. And I wanted to do everything all at once too, but right now I've learned that that's not realistic. I'm just trying to focus on just talking to my people and adding them to my database. And even that takes a lot of time. So just wanted just really hopefully inspire you guys to take control of the financial side of your business and know your numbers, know your score. And if you guys need help, every single one of you has an MCA that is just here at the ready to help you in accessing these tools, knowing how to plug your numbers in, how to see what you want, and we can help hook you up with an accountability partner. So there's no reason just to set today as day one and go start tackling. We're just at the end of Q1, so you can go back and do all your Q1 numbers and be right on track. So I guess we're at the end of Q2. Just kidding. So you could do 2 quarters. That's fine. Novalee, anything you want to add?
It's a lot easier to go back and do quarters 1 and 2 than it is to go back and do quarters 1, 2, 3, and 4. I had an agent once who brought in a shoebox, and she hadn't done her taxes in 7 years. And all she did was she just had a huge box of receipts and papers for 7 years. And she just turned that over to the CPA, and it cost her thousands of dollars to have him go through and figure out all that mess. She actually ended up getting money back, and she would have had that money if she would have just bothered to just do something about it. But she was so overwhelmed and so fearful about what the result would be that she just was paralyzed and did nothing. So just encourage you to just don't wait. Just do something about it today, put a plan into action, and do and get started, and turn to those who know what they're doing and let them help you. I just shared the spreadsheet with Gordon. And he'll be sharing it with all of you so that you can just download that data into a simple spreadsheet and get started.
Yeah, I would just
Thanks
say
for
it may
being on the
feel
call.
overwhelming, like thinking of all the things that you need to do. Honestly, once you start just plugging things in, it's a lot more simple than you think. And if you need help, we're here for you. Right, anything else? Nobody, we knew we'd get it done in 2 hours.
I know, but you know what? MCA's talk fast.
Are we still going to get our 3 Cs?
Yes.
You will.
Great.
Awesome. All right. Well, nobody else has anything they want to throw. I'll give you guys back an hour of your day, and we sure appreciate you coming and plugging in.
Bye, guys.
Thanks, Kimber.
Thank you.